Good morning. This is Larry McMillan with the stock market update on Monday, May 15th. So again, not much has changed. The stock market is still in this tight trading range, and it doesn't seem like fundamentals are going to break us out of here. They eventually will, of course. But, at this point in time, it seems like the bulls are ignoring the negative news about inflation and perhaps debt ceiling politics and all of that. But the bears have really been quite timid and not taking any advantage when the market moves lower either. So both sides are, just battling on a day-to-day basis. Last week, the entire week, the S&P closed within a 19-point range. Now, intraday, it did move farther than that. But most days, the market went down and then came back up. But there was a day when it went up and came back down. So we're in this trading range bounded by 40.50 on the downside and 4,200 on the upside. When we break out of that range, we should get a little momentum, although there are still, there's a wider range around that, extending from basically 3,800 on the downside, which is last December's lows, and also then the March lows up to about 4,300, which was last summer's highs. So the market is just waiting, and we are getting individual internal signals, but we're not getting any broad market movement or momentum off the S&P chart, so we're not carrying a core position at this time. The equity-only put-call ratios remain on sell signals as they continue to work their way higher. Brent has had another few negative days last week, and that canceled out one of the two Brent buy signals. So this indicator is right now sort of ambivalent, like the market. New highs versus new lows, we're still seeing a few more new lows than new highs, but not enough to really make a strong sell signal. It's just a minor sell signal at this point. The one thing that is quite bullish is the volatility complex. VIX has two buy signals in place, and also what we call the construct of volatility derivatives, which is essentially the slope of the term structure of the VIX futures. That's all positive. So we've got a number, as I said, bearish signals, bullish signals, and really not much happening in between. Even with the CPI last week, we had a big move, but it was all erased by the end of the day. So eventually something will break this out of here. I'm assuming either a negative or positive result from the debt ceiling meetings. But that could take a while. I mean, we could be in the middle of the summer or even into August, let's say, before that thing gets resolved one way or the other. I mean, it will get resolved, but it's all how scared will the market be in the meantime. Meanwhile, I invite you to visit our website. We have had a number of interesting articles lately. The most recent one was about the seasonality of VIX. VIX tends to drift down into the summer months, bottoming in July, though not August. By August, it's already starting to move higher. In any case, if you're interested in reading articles like that, subscribe to our newsletters on our website. And in any case, have a great week trading.